How are we doing, guys, and welcome back to the course. In this video, we're going to talk about psychology paired with technical analysis and other aspects of trading. So psychology, as mentioned towards the start of the course, is highly important for every single different aspect of trading. If we are not on top of our mindset, we are not going to be on top of our game in terms of taking the best trades and making the most money. So what we want to do is always remain on top of those 5 core principles that we spoke about towards the start of the course. The 5 core principles are pretty much our commandments that we want to follow. Okay, and what they're going to do is give us a boost of mental confidence, and they're going to allow us to always keep aligned with the real principles and the real possibilities of trading. So, as a trader, especially as a new trader, when we take losses, which we're going to do, okay, you're going to take losses, you're going to get offended, you're going to get stressed out, you might get angry. You're going to take these losses personally. You're going to think you've taken bad trades and that you've messed up. But at the end of the day, this is not true. So everyone takes losses. Even the best of traders take losses. Probably, depends on how often they trade, every week or every month. There's no way to completely filter out every loss. Even if you take the perfect strategy, okay, the perfect strategy, there's still news spikes, there's still geopoliticals, and there's still other things that can weigh on that trade that can actually just send it flying one way or the other, okay? So we're never going to win every trade. And that's one of the first things to really get down, really get in your head. Every loss is going to be a lesson. Don't take losses as a personal thing. Don't take losses as you being bad at trading, because that's not how it is. Losses are just part of the overall larger process. And when you understand that and when you accept that, you're going to have an easier time trading in the markets. So if you're taking losses personally, think about the fact that no one winning trade is going to make you a success. Okay, one trade is cool, but when you close out that profit, then you're right back into the next one. You pretty much don't even think about that trade ever again. So how can one loss be so detrimental? One loss is simply another cog in the actual over the longer term processes, the overall longer term processes. Same as one win is, right? You're easy to forget a win and move on to the next trade to try and win another. But when losses happen, we get caught up, we get mad, we get stressed out because we've lost our own money. And we think about, if we hadn't entered that trade, we'd still have that money. We shouldn't have done that. We made a mistake. Or, oh, that was such a crap trade. Things like this. But at the end of the day, if you are following your processes, you're following your rules, losses are normal and losses are going to come in. They are part of the overall larger process. So consistent trading, long-term successful trading isn't win, win, win. And a loss is not, oh no, I've taken a loss. I've messed it up. It's win, win, loss, loss, win, loss, win, loss, loss, win, win. Like this, okay? So you just have a huge abundance of wins and losses paired together. But we know if we use our processes, we follow our processes, we use our risk reward, we manage our risk with stop losses, all these other things, and we trade our technical plan, and we hold the discipline to actually let our trades run out, then we're going to be fine in the long term. Okay, you can take 5 losses in a row, and at the end of the day, if you're following your process and you're following your rules and you're following a strategy that is proven to work, then you are not going to lose in the long term, which means losses are essentially nothing. Okay, they don't mean much at all. So instead of taking losses personally, treat losses as a lesson, a blessing. Okay, from every loss, you're going to learn a new way to actually filter your trades in the future. From every loss, you are going to develop even further emotional resilience, and that's inside of trading and outside of trading as well. One thing that surprised me about trading is how much it has changed my views on loss, monetary loss, and other loss in life, because nothing seems too bad anymore. The amount of money that you give to the markets in those early days, hopefully you won't because you've got this education, but the amount of money you give away in the early days of trading, self-taught, you kind of get used to it. And from there, really now, I can sit in a trade for ages in drawdown and it doesn't stress me out. Or I can lose 5 trades in a row and it doesn't stress me out because I know that when the win comes through, all of that is going to be reversed. Okay, it's just simply a step in the process. Trading is not about today. Trading is not about that one big win. Trading is about the long term, the next 5 years, 10 years, 20 years, and your ability to consistently make profits, right? We don't need to make one huge winner risk our whole account to make one huge winner. We need to risk a tiny amount of our account and hit 1,000 small winners. So first step in bringing psychology into your technical analysis is really going to be surrounding loss, because this is where a lot of the psychology is really going to come into play and begin to affect you. Okay, if your trade is running in a loss for a long time, forget about it. If you've got your stop loss in place, you have your parameters set, you've got your stop loss and your target set, well then before you enter the trade, were you stressing about that trade running into a little bit of loss? No, because you have your stop loss positioning logically placed. So in that, right, just remember that when you set the trade up, was it a big deal running into that? No, because your stop loss is clear of that area. You left that open as a possibility. So now that it's happening, allow it to happen. Give the trade room to breathe and allow it to come back into profit. And if it does hit the stop loss, remember that every loss is going to be a lesson. You can learn, reanalyze, break that loss down, see where you went wrong. And if you didn't go wrong, mark that as well. Accept that. You're not always going to be wrong when you lose a trade. Oftentimes, it will be down to simple part of the process, right? Simple losses happen. That's how it is. So yeah, the first key to getting the psychology down in the technical analysis section or area of your trading is to just accept losses. Okay, accept losses for what they are and understand that they are never going to end. You are going to consistently see losses every trading session. Well, not every trading session, but every trading week, every trading month, you're going to hit a loss. You might hit a few. If you're following your processes and you're overweighing them with those heavy risk reward trades, then it doesn't matter. Okay. So another thing about psychology and technical analysis is going to be closing trades early. Now, this is something that is very important, and this is one of the biggest things that psychology is going to burn you with when you're actually taking your trades. Now, it's very easy to close trades early in the early days of trading. Let's say, for example's sake, that we are selling the market off from this peak here. So we've seen a bearish engulfing candle, and we want to sell the market. We see that we've actually got this zone above, right, supply zone, and we have such a huge way to go down that overall, let's say we could be looking for this trade. Now, that's all well and good, a nice 1 to 3 risk reward trade. But if we actually let the market do its thing, what could happen is we may get impatient. We may see the support met and we may be telling ourselves, okay, the price is going to bounce from here. It's not going to go any further. I'm going to close it now. And then you close the trade now and you've secured a 1-to-1 risk reward overall. So if you're risking $100 on this, you've made $100 on this tap down. Now, the market is obviously going to continue in your favor. And that's going to frustrate you even more so than if you just held the trade out longer, right? So eventually, our 1 to 3 risk reward profit target is most likely going to be met. And we're left here with a 1-to-1, which obviously does not really fit inside of the boundaries of that risk reward strategy that we want to go for. So we can see that patience here would have just allowed the trade to run into take profit, and we would have made quite a nice amount from this. Instead, we've closed the trade early because we panicked. Okay, based on that psychology, we've panicked and we've closed this trade early at a 1-to-1, which breaks our risk reward strategy. We've turned here what could have been a big 1 to 3 winner into equivalent of 1 loss. So next loss we take, all of this work isn't done. Okay, that is where psychology is going to be a killer in terms of greed and a little bit of stress. So not greed to hold out the position, but greed to actually get those profits locked in the fear that they're going to turn around. And now this is another thing that comes down to process. Okay, we spoke in the previous video about risk management, executing your trades and then using your stop loss positioning at the entry point or inside a profit to actually remove the risk from a movement. Now, this is all good. And when you're in a trade, you should do that. Allow your stop losses to be positioned in a good place and then just hold the trade out and see how far it can go. But what you might do is think, I'm not going to be happy if that stop loss is hitting profit or break even. That's not enough profit. I want more. So I'm going to close it right now. And doing that sounds good at the time because you've secured a bit of profit. But it doesn't actually fit into your process, right? Your overall risk management process. If you're closing a trade at 1-to-1, next trade you lose, you've burned all that money away, right? So because you didn't want to risk a stop loss in profit getting hit or a stop loss at break even getting hit, you've actually just screwed your risk reward ratio and screwed your risk reward plan for this trade. At the end of the day, it is better to hold it out, go for that larger move, and worst case scenario, you're going to get closed out at a small profit or you'll get closed at break even. It's not a big deal. It's part of the process and you can move on to the next trade. Now, if that trade doesn't get stopped at break even, you are going to fulfill that whole profit target and secure that big trade movement. So you can see really the idea of that and why it's so important to actually have that patience and have that discipline to hold a movement. Now, in this instance, we are on the weekly chart. If you didn't hold a move for months, then that is completely understandable. But, for example's sake, that's what we're looking at. We're just looking at these reasons why people are going to be exiting trades early, okay? And you're probably going to do this 1 or 2 times. You're probably going to be tempted to do this, jumping out of trades early before they're really complete and before you've actually secured the maximum profit that you can get on it. So don't allow the psychology to overtake you. Don't allow your discipline to lack, and stick with those original targets. There are areas where we're going to logically leave the market early if we see some form of reversal, okay? But we should never be cutting it off at 1-to-1 or earlier, simply because we have a little bit of fear that we might lose out and realize profits. So we've spoken now about making sure you don't cut your profits too small. It's very important, and I would say it's practically as important as understanding that one loss is part of a very big process, one small part of a very big process. So is one win. Okay, both the things we've spoken about in this video are probably going to affect you, right? There is no way to really stop your mind from reacting when you see, unrealized profits right there in front of you, and you get that urge to close out. That's going to happen, and a few times you might do it, but I want you to slap yourself on the wrist and think about what you've done when you do it, because that is really ultimately how you're going to overcome. Okay, it's got to be a bit of a tough lesson. So you are going to learn over time to master your emotions and master your psychology and begin to care a lot less about what the market is doing right now and focus more so on the market as a longer term process. Until that happens, do keep in mind what I've said here. Don't be closing trades early at 1-to-1 or less, thinking, okay, I've got this unrealized profit, I'll close this out. Next time I win, I'll have some more profits. No, because next time you lose, all of your profits from this movement are gone and you're back at break even and you'll be feeling like an idiot. Especially when you check the chart and see that it filled your 1 to 3 risk reward take profit. That's going to make you feel really stupid. So patience, 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 discipline, discipline, discipline. Both things are needed if you want to succeed, right? Keep that fear at bay. Understand that even if your trade loses right now, who cares? It's part of the overall longer term process. Follow your discipline and follow your risk management and your technical analysis strategies. And in the long run, you're going to win. Okay, promise you that you will win. So that is the main pointers that I wanted to talk about in this video, right? Keep that fear at bay. Keep your discipline at the forefront of your mind always while trading. Something that I do want to add as well is just a little tip and pointer for controlling your emotions while trading. First of all, I want to never see anyone going down to these 1 minute, 3 minute, 5 minute timeframes when you're in a trade. Okay, you can view them for entertainment or for monitoring market movements whatsoever, but when you're actually inside of a movement, when you're actually inside of a trade, you should never be referring to these low time frames to see the current movements, right? Let's say then we entered here right now, we've entered a sell trade for whatever reason. Now, hourly chart, okay, no, let's just go with a long trade. So let's say we took a long trade from here and we are now riding the market up. Everything's looking good. We are looking bullish, okay? We have a little bit of slow momentum, but we are looking bullish overall. And, we've taken out this 1.2850 key level. So we've probably got a bit more upside at least now. Now, problem is if we drop down to the 1 minute chart and we start viewing the stupid market movements, these tiny little market movements, absolute market noise, right? We see a drop like this. This is going to stress us out. This is going to play on our emotions. Could cause us to actually close the trade out. And, we'd have closed out there. We entered down here. We'd be making like 10 pips on this movement. Ultimately, you are going to miss out on some opportunities because you're looking at this low time frame market noise. Now, if you were to allow the market to wait, another 10 minutes, we can see that we're actually rebounding and we're actually going and retesting these highs, likely to take these highs out and continue that uptrend. If you'd have been on the hourly chart or the high time frames, you would have never even seen these movements occur, okay? And they wouldn't have caused you much stress at all. So never be keeping yourself down on these low time frames to monitor the market movements when you're already in a trade. All it's going to do is cause you a lot of stress and put you in a place where you end up closing trades early at the tiniest little profits, just in fear of this trade reversing on you. So hold your own, prep your analysis, prep your plan, prep your trades, and then hold your own and give yourself the discipline and the patience to just sit and allow that trade to play out as needed. Okay, doing this, treating it as part of the larger process, and never scaling down to those low, noisy time frames to try and gauge what the market's going to do next is going to work out favorably for you in the long run. Always remain logical. Try and trade as much like a robot as you can. So another pointer that I want to mention, something that I've used to do, and sometimes I do it anyway when I want to get an overall market structure view of the market, you can remove colors from your charts. What I mean by this is we have, on my charts, for example, green and red candles. These are pretty much the two basic candles that we're going to see everywhere, okay? Green is bullish, red is bearish. Now this actually has a part to play on your psychology. Green means good, red means bad, right? Green means price is going up, red means price is going down. So let's say you're trading in line with the market then. We're trading up. We see green candles, we're loving it. We see some red candles though, and that's going to freak us out. It's psychological wiring, right? We know what this means and what this means versus it. So when we see this actually come into play, red is not what we want to see. Let's say we're on a bullish movement, we are buying the market up. Red is not what we want to see. So that's going to trigger something in our minds that stresses us out and puts us into a reaction mode, a bit of a defensive mode where we may actually go ahead and close a trade early. Like if we see this big bearish movement, we may then actually go and close the trade early. We've seen a big red candles and that's going to stress us out. Now, something you can do then is actually go ahead and remove the colors from your trades, right? So you can trade colors all, you can trade your charts all one color. It works just the same. Now, we can still see dojis, we can still see pin bars, we can still see engulfing candles, we can still see market structure, highs and lows. There is actually no need for the charts to be two colors. They will be default, but something I used to trade was black candles, okay? I mean, anything's the same, these are just a little bit ugly, but you know, you don't need to be trading two colors. And if you think that's going to play a part in your psychology, or if you want to completely eradicate that side of trading, that side of the stress of the mindset, you can do that. Give it a go. Get rid of some of the colors and trade black candles, trade white candles, trade whatever color candles, but keep them both the same color. And this is also going to help you to focus on that market structure that we like to look at, okay? You're going to spend less time looking at individual candles and the way that they're running, and more time focusing on the overall market structure and the overall real market trend that's going down right now. So those are just a few additional tips that I'll give you in the way of psychology and managing your psychology while trading technicals. So that's all for this video. Main pointers then. Always keep your discipline at the forefront of your mind. Never let it slip. Never focus on one individual trade as the be all and end all. Okay, whether you win or you lose, tomorrow you won't remember it. Always stick to your processes. Don't break your risk management strategies because believe me, you will notice and you won't let that go. Stick to your risk management protocols. Stick to your technical plan. Stick to those higher time frames. Or if you do trade scaled in, there's still no reason to be on these 1 minute, 3 minute, 5 minute charts, viewing the trade as it runs. Okay. So without further ado then, keep that forefront focus on your discipline and keep those processes in mind. And I will see you over in the next video when we're going to conclude a lot of what we have learned so far.